Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about one of the world's largest footwear and apparel manufacturers, that is Nike. So let's go ahead and begin into today with the daily stock analysis. Thank you for joining me today. Sorry if you tuned in just a moment ago and you got kicked out. Sometimes that happens with technology. I use this phrase that comes from Robert Burns, and the best laid plans of mice and men can often go astray, especially during a pandemic when everybody's trying to stream at the same time. But today we're going to talk about Nike, which is one of the world's largest apparel manufacturers. And as we do that, I'm reminded of a quote by Pablo Picasso. He said basically that our goals can only be reached by one thing, through a plan, a vehicle. Now, Pablo Picasso, some of you may be familiar with his history and some of you may not. And he actually was one of the few artists out there that planned very, very well. He ended up a millionaire during his lifetime. But I'm going to give you a secret about Pablo Picasso. He wasn't the perfect planner because he died without a will. But my point in telling you this is this. If you need help planning, go over to richardsfinancialplanning.com and you can learn about a process that I've created called the Prosperous Planning Process. And that'll help you out a lot. So let's go ahead and begin in talking today about today's stock. Now, the stock that I'm discussing with you today, I'm going to classify this one just a little bit differently than some of the others. We've been on a theme here talking about a hair portfolio and a tortoise portfolio. But when I look at this portfolio, it's really more like a sideline hair player. Now, what do I mean by that? The idea is when we're looking at the strategies of the tortoise and the hare, we start off looking at investments from the perspective of the tortoise, which has a very strong balance sheet. Then we have the hare investments, which have potential higher returns, but they also have a lot greater risk that may be associated with them. And this is the phrase I was just talking about, that let's not forget about the mice. The best laid plans of mice and men often go awry. Now, that's a John Steinbeck, Robert Burns quote, and it portrays a lot in the stock market because as much planning as we put into planning, it's not perfect. It's not a perfect science, and there's no guarantees that are associated with it. So let's learn a little bit more, though, about Nike, because Nike has some really interesting aspects of the company in itself. Yeah, they are the largest footwear manufacturer in the world. They have 6 major categories of their business: running, basketball, soccer, training, sportswear, and the Jordan apparel. The footwear generates about 2/3 of their profits. They have more than 400 factories in 40 different countries. The company right now stands at about $220 billion in assets, billion with a B. Now, today, the stock ended up a little bit, 1.56% at $140.50. Is that a fair price? We'll talk about that just a little bit as we go through some of this. Now, remember, when we're talking about stocks, we look at 3 different things. This is the recipe for success. The first thing that we're going to look at is the stability of the stocks, the earnings, and the competitiveness. And we're going to talk about Adidas and Under Armour and some of those other different competitors that are out there that are competing with Nike. But let's first look at the stability of the company. This company is amazing when it comes to its stability because its stability is based on primarily one thing. It's based on one thing, and that is its intangible assets. It has a brand that's not, it's like none other. They have premium pricing that's amazing. 90% of the performance basketball shoes that cost $170 or more are Nike shoes. They have some shoes that are $1,000 a pair, and dozens of them are $300 a pair. Now, take a look at this. You've probably heard some of this in the news. The Nike Air Jordan, the flu game shoes that goes for $104,765. Of course, we can't forget the solid gold Air Jordans that sell for about $2 million. Now, Nike's forward path is based on its strategy. And its growth strategy, they take it from their association with sports. And in sports, you may have heard of things like basketball's triple double. That's when 10 or more points are scored as individual shots, assists, or rebounds. And then when we look at football, we have the football double triple, which is 100 yards of passing or rushing. Now, at Nike, Nike has come up with what they call the triple double. Now, what's that mean? It means that Nike is looking to double their innovation, double their speed, double their direct to consumers channels. And they've actually been succeeding very well at this. So let's look at some of the earnings. Let's look at the numbers. I don't want to get too geeky on this, but I want to pick apart some of this because this is really important for you to understand what is going on with the company and what the future may entail. In 2020, their fiscal year 2020, their digital sales alone were $5.5 billion. Then we go a little bit further when we look at the total revenue for the year of 2020, their fiscal year, that is, it's $37.4 billion. Now, when we talk about competitors, this is something significant. That number is 35% greater than Adidas. And we're going to look at what Adidas did here in just a few moments. As far as footwear sales in 2020, their fiscal year, that is, it's at $23.3 billion. Now get this. That is more than Adidas, Puma, and Under Armour together. They're a powerhouse of footwear. 31% of their sales is coming from China, Asia Pacific, and Latin America. And they're looking to boost that going forward, especially in China. Now, the fiscal year, I want to explain this real briefly. You understand there's calendar year with companies and there's fiscal year, that's fiscal with an F, FISCAL, their fiscal year. It actually starts in June. So some of these numbers may seem a little bit weird when I talk about them just a little bit, because I'm talking about their 2021 first quarter revenue, which actually started in June. That was at $10.6 billion. It was down year over year by 1%, but hold on, don't be put off by the fact that they had one negative number that went in there. Their gross profits were $4.7 billion, and their gross profits are their margin. That number is 44.8%. It is down year over year by about 3%. But get this, when we look at their net income was at $1.5 billion. And even though that sales were off, their income was up 11%. That's the hallmark of a well-run company, in my opinion. When we look at actually what their diluted earnings were for their first quarter of 2021, remember this is actually starting in June of this year, 2020, it was at 95 cents. That's actually up 10% over the past fiscal year. Now, we have to look at what's happened with this company over the past calendar year as far as their quarters go and compare it to the quarters of past years. So if you're just listening to this, what I'm throwing up on the screen right now is a graph that's showing the earnings on this company from way back in 2015. And what you see is you see a dark blue line, and the dark blue line is going to be the actual earnings per share, and then the dotted blue line is going to be the estimated earnings per share. And what you notice in here is that there was only one quarter in 2019, the fourth quarter of 2019, that was below their estimates. Every other quarter, well, I take that back. The pandemic quarter was under, but I don't really count that because who wasn't under during the pandemic quarter? But look how they bounced back. It's amazing the bounce back that they had. Okay, let's keep moving on here just a little bit. One good thing about this is their dividends. I love dividends.
The beauty of your side.
Listening as the music interlude went on there, that was just to introduce you to the fact that this company has a 0.8% dividend. Now, you might not think that that's really big, but when you look at a company that has the kind of growth that they have, that's very good. 0.8% is a good dividend. Now, let's look and see actually what the price has happened, what's happened to the price over the past year. Now, the spaghetti graph that I've thrown up here on the screen has three things on it. The dark blue line is going to be the representation of Nike. The red line is going to be the representation of the S&P 500, and then the green line is going to be the NASDAQ. Now, we all know that the NASDAQ is predominantly tech stocks, but this stock, Nike, an apparel stock, a consumer cyclical stock, has hung with the NASDAQ very, very well. A year ago, it was trading at $98.70, almost 71 cents. Today, this is the number that I got off of the wire from about noontime, and it was at 140.43. It ended the day a few more cents up at 140.50. But with this idea, though, if you follow my cursor, the dancing cursor, you can see that it's ended a one-year run up 42.27%. And for an apparel stock, that's absolutely amazing. So let's draw the timeline a little bit longer and look at this over a 3-year period. If we go back to 2017, we see that the stock was trading 3 years ago at $62.81, almost 82 cents per share. When we look at the finish of today around 140, that's a 77.6% increase over that 3 years. And when we annualize that, this is an apparel stock. It's up 30.76%. So let's take a look and see what the bulls and the bears, the analysts, are saying about this. When I hear that bulls part, I always think about the skit from Saturday Night Live, but I digress. Over the past year, what we've seen is the growth of this company outside of the United States. 70% of the growth is from outside the United States. Now, I know that there are some of you that have wanted me to cover European stocks, and I am going to do that in future days, but I want you to recognize that some of these companies that are worldwide players like Nike, they're based in Oregon, but they're a worldwide stock. They do most of their business outside of the United States. And that's really a very bullish aspect. They're not just relying on one country for their growth. And their biggest growth opportunity, most bullish analysts are saying, is going to come from China. Then again, we have that triple-double strategy of innovation, direct-to-consumers, and speed. That is a big thing going forward. And another aspect is that they started the digital channel membership when the pandemic started, and they have pushed that forward, and it's actually helped significantly their growth. Their gross margin increase, it is possible by three things. One is that this digital channel that they created, it helps in automation, e-commerce, and actually helps drive those higher prices. Someone can go online and shop for the Nike shoes, even though they're expensive. They know they're going to pay $297 for a pair of shoes. They'll shop around and then they'll find it, perhaps the best price, at Nike. Nike is also able to pinpoint their retail strategy. In other words, what they've done is they've pared down their distribution by about 25%. And they're going out to companies like Dick's Sporting Goods. And those companies like Dick's Sporting Goods are allowing Nike to really direct the direction of their sales. And it's just not being directed by the company in itself. Okay. Like any other stock that's out there, everything is not rosy. The brick and mortar store closings are affecting the sales of Nike. There's no question about that. There are trendy athleisure competitors like Lululemon and Adidas that are competing and are taking sales away. Now, yes, Nike's a huge player in the apparel market, but they still have a lot of competition that's out there. Lululemon is one that's significant and up and coming. Lululemon, you may not know this, but they made a very bold move and went outside of the apparel industry to diversify, and they bought the company Mirror. You've probably seen the commercials going into Christmas about that. The other thing to keep in mind is that the COVID-19 is continuing to affect sales, and the longer it goes, the harder it's going to be. Now, how does Nike compete with other companies? So let's take a look. Nike's in blue. If you're listening, what I'm showing right now on the screen is a spaghetti graph of 5 different companies. And the 2 that we're looking at right now, the closest are Nike and Adidas. And you're going to see that there's probably about a 10% spread in between Nike and Adidas as far as their growth goes. The next brand is one that you might not think of when you think of a competitor for Nike, but it's actually Hanes brands. Now, I had to write this down so I can read it off to you, but the Hanes brands also, you've probably seen them at some places like Academy or some of the other different places. The Hanes underwear, Champion brand, Playtex, Bally, and Bonds. They are a competitor. They are a competitor that competes with Nike. VF Corp is another one. VF Corp you've heard of by other name. Vans brand shoes are a big competitor with Nikes. They're not the same price range, but they still compete. So is North Face, Timberland, and Dickies. Those are all VF brand. Now, the interesting thing is a lot of people might think that Under Armour is a lot more successful than it is, but if you're looking at the spaghetti graph, you're actually seeing that Under Armour in the past year has been lagging all the other 4 competitors that are out there. Now, always understand that the past performance is not going to be a guarantee of the future results. So what are some of the analysts saying is a fair price for Nike? When we go to the first one, which I like to pick first, is going to be Morningstar. Morningstar says that the fair market value of Nike right now is $107. With that, they rate it as a 2-star investment. And remember, the star system is different for stocks as opposed to mutual funds. Mutual funds has a lot more stuff that goes into the calculation and the determination of the stars. When we look at the stars from Morningstar when it comes to stocks, it's primarily based on value. Now, that means that with the current price at around 140, actually it should be 140.50. I had 140.35 here. It's about 31% over top of what Morningstar thinks it should be selling for. But in general, look, okay, I apologize here. It says Taiwan Semiconductor Manufacturing. That was yesterday. But the chart that you're seeing in front of you actually is Nike. I thought I got all these correct. Okay, that's why I put a disclosure at the very end. But the whole idea is this. There are 27 analysts that are following Nike, and 20 of them are saying 20 of them are saying that it's a buy. That's very strong. Now let's look at some of the individual companies and what they're saying, and look at the spread and try to determine what's a good price for Nike right now. Remember, it's trading at 140.50. The analyst that probably has the lowest target on it right now is Argus, and Argus is putting a target price in this between 115 and 145. The most aggressive target is going to come from UBS Group, which is actually 167. So there's a pretty big disparity in between the low and the high of 115 to 167. If you believe that 167 is the target of what it can reach, then the price today, 140, is a bargain. If you think 115, then it's overpriced. Remember that Morningstar is saying it's around 107. So I want to throw this up next because the options that are out there right now tell you a little bit more than actually what the analysts do. And what I mean by that is when I'm showing people on the screen right now, for those of you that are just listening, these are the calls and the puts for Nike. And what you're looking at is December 24th. And what you can see, if I can make this just a little bit bigger for some of you who are actually watching, let's go down to the bottom here. And what you're seeing is you're seeing the call option. Remember, a call is a contract to buy. Contracts to buy this stock at 145 are selling for $2.06, and those are the most prevalent. Now, you may be asking, if you don't follow options a whole lot, you may be asking yourself, hey, how can it be doing that? Because the stock in itself, it has a 52-week high of only 140.74. How can you have a call option for 1 45. Well, that means these people are being optimistic, and they're saying that if it goes over 145, they're going to come back in and they're going to buy this stock at 145. So there's a lot of optimism out there. But on the other side, there's those people that are pessimists too. You have the number of people that there's 116 contracts out there right now for 136. These are the people that are saying, hey, just in case it tanks, I'm going to be able to buy this at 136, and at least I'll have some protection that's going forward. Now, this is just for December the 24th. Let's take a look a year from now and see what the options are on this. And predominantly, you're going to see that there are call options. If you follow my dancing cursor, you're going to see that there are a lot more call options out there than there are puts. Remember, put is a contract to sell. It's a contract to sell at a predetermined price. And there are a lot more calls, which are going to be options to buy than there are options to sell. And right now, we're looking at a year from now, the biggest number or the most representation there is for a number is a price of about 140. The breadth goes in between 136 and 145. I think right now what we're seeing, the 140 number, is a pretty fair price. It could go lower, yes, but I think that what most of the market is looking at is they're looking at maybe a price range in between. We see there's 208 contracts at 139, and then it starts to fall off at about 142. As far as a price, there's 104 contracts for that. So the idea is, in my opinion, I think the price right now that most of the market is saying is fair is between 139 and perhaps 142. It all depends. Now, we could have a double dip recession possibly, and it could come down again, because remember, on this particular stock, it has gone as low in the last 52 weeks as $60. So you have to keep that in mind. All right. As we end this today, I end it with where I started, and that is when you're looking at stocks, you want to look at three things. You want to look at the stability, the earnings, and the competitiveness. And that's what we have done today with Nike. Hopefully, it's given you some insight into what this company may have available going forward. I think it's a good, solid stock. But remember, as with all investments, that the past performance is not a guarantee of the future results. So, friends, with that, I want to thank you for joining. If you just joined in, go back and watch the replay, because there's a whole lot of information here packed into this 20 minutes. And thank you for coming back. We'll come back tomorrow and bring you another one. Have a good evening.